Let's turn to gold first and then to Bitcoin. Talk me through your position on both of those.
Well, gold is an interesting juxtaposition with what we're seeing with regard to the Goldilocks and soft landing narrative. You wouldn't expect gold to be doing what it's doing if we're truly going to have a soft landing and you got cyclical stocks and small caps and others outperforming. So one of the things that to me is a big factor there, outside of what's happening in the Middle East and some of these other issues that are creating some angst, is the fiscal situation here in the U.S. If I'm a prudent investor and I see that the U.S. is going to run another close to $2 trillion deficit, and we're going to have to issue new treasuries, and we're going to be at, I don't know, 40 trillion in total debt before long, I don't want to own Bitcoin, and I'm probably a little leery of the fiat currencies like the dollar. Gold is a great place to invest, and I think that's a big part of what's going on. Ultimately, over time, though, you wouldn't expect gold to be rallying if we're truly going to have a sustainable stock market rally and a true soft landing and Goldilocks type environment. That's one of those things we need to keep an eye on that potentially could be a red flag.
How about Bitcoin?
Bitcoin is a risk asset. Bitcoin is not a substitute for fiat currency. I think that the comment was digital gold. I wouldn't call it that. Bitcoin's purely a risk asset. Bitcoin is something that you own when risk is up, when risk appetite is up. And the other thing is Bitcoin does the best when liquidity is flush. We're seeing liquidity come out of the market. Treasury liquidity is declining during tax season, probably temporary given it's an election year. But as liquidity declines, Bitcoin recently hit an overbought level. You're going to see Bitcoin suffer from that. But I would never want to own Bitcoin in lieu of the dollar or other fiat currencies because I was concerned about the fiscal situation.
But that is the entire argument that Bitcoin bulls make. Do you think it's time to put that to rest? What are they seeing? And when does it maybe act like a safe haven?
Bitcoin bulls are talking their book because they're invested in Bitcoin and they want to see it go up. Personally, I've yet to see it. At some point in time, if cryptocurrency becomes regulated by the central banks around the world, that'll be a different story. But then it won't be nearly as volatile as it is today. And you won't have the opportunity for the gains you have now. But as of right now, I just don't see it, and we don't see it as a viable alternative to the dollar or other fiat currencies.
Okay, let's talk about actual gold, the precious yellow metal. An idea that I talked about with a guest last hour is the fact that if China's economy is recovering and you're seeing the consumer bounce back there, are they going to be spending their money on gold? I mean, traditionally, typically, that has been what has happened, but with more investment options, perhaps the stock market, which has been under so much pressure, do you think that happens this time around? Could that sort of underpin higher gold prices?
Well, I think you're talking about reserves going into the gold and out of the dollar, and I think that is obviously something that could happen. The problem is, or the headwind to that theory is that there's no market in the world that's large and liquid as the U.S. Treasury market is. So as countries like China are developing reserves and they need a place to park the reserves, there's still going to be demand for treasuries. Gold will take a piece of that, but I don't think that really is a threat to the U.S. Treasury market or the dollar in general longer term. But yes, near term, particularly given with what's going on here in the U.S., rates are going to come down. The fiscal situation doesn't look particularly attractive. I can see central banks around the world looking at gold as an alternative, at least in the short term, to the U.S. dollar and treasuries.
I was actually thinking about consumers, but it's a good point. So maybe both of those together. David, thanks very much for being with us today. David Spika.